Welcome back to the Ticks and Trades channel. My name is Sam. Today is Friday, October 31st, Halloween Day, but we're going to cover the entire week starting with Monday the 27th through today because the last recap video was on Friday, or at least it covered Friday the 24th, a week ago. So this week was all about follow through after last Friday's break above the high of this breakdown candle. That was 674. So the bulls had momentum on their side. The bears had timing on their side, approached and hit this trend line, and we stepped into the final stretch of October with both camps trying to write the closing line of this month's story. Typically, I would show the levels and the game plan for each day, but for Monday the 27th, I don't have the game plan saved to the computer that I'm working on right now. It's back on my main trading rig. I'm out of town using a temporary setup. I do have a recording of Monday's price activity and my one trade, and you'll see 4 of the levels for the day in that video. As it turned out, none of the official levels on Monday were hit, so no trades were taken. No trades happened if you were playing by the rules. Unfortunately, I chose to improvise. At about 9:50 or so in the morning, I shorted one E-mini contract at just an arbitrary spot, waiting for a pullback that never came. I watched the market drift higher, convincing myself that it would turn at any moment, but it didn't. So I'll scrub ahead here and show you that by the time my 20-point max loss limit was hit, the market had done exactly what markets do best, basically taught me the same lesson that I thought I already knew. So down $1,000 for the day, and I had only myself to thank. I let this go until the end of the day, 4 p.m. Eastern. There you go. Pretty unnecessary. I had no reason to do that, but it's here for the record. By Tuesday morning, I was on the road. I had a little road trip up north, about a 13-hour drive. So no trading for me on Tuesday, but here is a copy of the levels and the game plan that were published for that day. The game plan reminded us that the SPY was still undeniably bullish, even if technically overextended. The bulls were still climbing, defying gravity, pressing price up toward that long-term trend line that we've been tracking since midsummer. Same one that defined the structure before that October 10 drop a couple weeks ago. The top zone for the day was between 688.22 and 688.66. That's where the trend line was. You'll see that in the screenshot below in a minute. The game plan also warned against the temptation to fade strength too early, a warning I could have probably used a day earlier. With the FOMC announcement scheduled for Wednesday, the market was likely setting the stage, but we just couldn't say for sure it was going to be for a breakout another leg higher or a breakdown at this point. So you can read the rest of this game plan, quite a bit of information. And here is a screenshot of the 1-minute chart with the levels plotted and the zones before the market opened on Tuesday morning. If you would like, you could go back and plot the levels yourself for these days that I'm covering here, but I'll just tell you now, for those who traded strictly by the rules, Tuesday offered one clean base hit. That was at 687.18 for 4 points and a near miss at 688.22. That was a near miss of the profit objective, so it's a wash playing by the rules. So it was a relatively tidy kind of procedural kind of day, and one that I wasn't around to trade. And there is no footage of price action to show, no recording like usual. And on Wednesday, the 29th, that was the FOMC day, it came with the usual mix of tension and restraint. Price was still flirting with that same trend line around 689 to 690 or so. The daily plan here pointed out that Tuesday's candle, the day before, had closed as a doji candle. That's usually a signal of indecision and can be a reversal signal if other things line up as well. So here's the game plan for the day. The rules were simple. No new trades after 1 p.m. Eastern. Just don't get into any trades when volatility could be potentially high. Just safer to stay out of the way during a time when price has the potential to go crazy. So that was kind of the focus for the day. And you can read through the notes. And I think at the bottom, we've got a screenshot here of what the chart looked like with the levels plotted around 9 o'clock in the morning. The official trade for the day based on the levels and the rules was just one. It was a long trade at 689.10 that produced a clean base hit for 4 points. And after 1 p.m., the FOMC headlines dropped and volatility exploded as expected. So the remaining levels that were hit were not traded per the rules, just to stay out of trouble. My own trade on Wednesday was more experimental, I guess you can say. I shorted one E-mini contract in the pre-market against the high of that doji candle from the day before, expecting a morning pullback, 15, 20 points, maybe more. I'll just move ahead here. I had a chance a couple times to close out for maybe 10 points or so. So I gave it some more time. By 1 p.m. or approaching 1 p.m., when I really wouldn't trade per my rules anyway, I was kind of back to even and I decided to step aside. So I jumped out for basically a tick or a wash. So here's 1 p.m. coming up. Just close it out. No harm, no foul, just an experiment. And then I did let the recording go for the rest of the day just to see what would happen during the FOMC announcement and afterward, 2 o'clock, 2 p.m. or so, 2:30. So here's when the fireworks started. It's kind of interesting to see what price did with these levels. They did bounce at 685.04, found a low at 682.96. And of course, they sliced through this other level at 687.05. But when they came up to it again from the underside, they couldn't get above it. So the levels were important. It's just safer to not trade on days like Wednesday, when you can expect it to be a rodeo. So anyway, let this go till 4 o'clock or so. That was Wednesday. Now we're at Thursday. You can take note of the levels and read through this. The FOMC hangover was in full effect. Gravity was reasserting itself. So price continues to drip overnight. We talked about that. On the daily chart, there was nothing blatantly bearish, but on the shorter time frames, started to show some cracks. The 4-hour chart looked like a rollover. The 15-minute was consolidating with a bearish look underneath its 50-period moving average. You can read some of that here. So the plan for the day was pretty simple. Just take base hits, respect the momentum. You can read through the rest of this, pause it if you need to, and here is a screenshot per usual of what it looked like before the bell. As for me, I took that same 683.30 setup here at this level when they were underneath it. They came back up. I went short with 2 contracts, and as you know, did not work, and I hit the 20-point limit, or max loss limit as I call it, because no reversal signals materialized before they got up to this next level. They never did hit the level. That's kind of the heartbreaker. I was ready to go short there again to kind of redeem myself, but as you can see, that didn't happen. So I just stuck to the rules, although I did not take the recycle trade down here at 683.30 on the other side. And you'll see that work out. There we go. There's the bounce. And then I think there was another trade later that I did not take, but this recording might stop before that level down at 680.54 was hit. I think that's what it was. But I just stopped this recording around noon or so. So that was it for me on Thursday. And then came Friday, the end of the week, the end of the month. And the game plan is still posted online on the member side, so we can dig into it here. So overnight, price climbed over 50 S&P points. They were poised to gap up at the open. And this was a setup for the possibility of some larger than usual swings. The plan highlighted 687.25 as the bull axis and 679.95 as the bear axis. So those levels would define the battlefield. You can read through these notes. Once again, screenshot of the levels posted before the opening bell. We can look at the 1-minute chart with these levels plotted because they're still on the chart from trading today. The first trade opportunity came at 683.90. They were underneath it. So here is the first 15 minutes, 9:45 a.m. Eastern. They came up into it right here, hit the level, pulled back. But if you're playing by the rules, it was a near miss of a 4-point profit objective. So strictly speaking, we're not going to count this as a base hit trade. You'll see me take this trade in the recording later, and I held on to it a little longer, and I was able to pull, I think, 5 points. That was the potential short trade, playing by the rules. You would have jumped out at a wash. When they got above it and they came back down into it here, this was the recycled trade, same level. And just so you know, 683.90 would be 683.95, 5-cent buffer. Came down into it with a low of 683.94 and bounced, and there's the recycle trade. So that's an official trade, 4 points. That's the first trade of the day, and then the next level that was hit was 679.95. You recall that was the bear axis. If price would get below this and close below this, like close 10-minute, 15-minute candles, certainly hourly candles, then the bears could be saying something. But they got above this thing. In the meantime, though, it provided a trade. They bounced right here. That's 4 points. And of course, in the bigger picture, this was support for the rest of the afternoon. Playing by the rules, up 8 points for the day. So the trade that I took was the short at 683.90. I used 6 contracts. Now, playing by the rules, you would have jumped out at a wash because they almost gave a 4-point base hit. Let's see if we can get up to it. So they hit the level there, pulled down. It happens pretty fast, but if you were being strictly rules-based, and following the procedure and following the process, you would have jumped out at a wash. But I took 6 contracts. You saw what happened. 5 points. That's $1,500. And then that was it. I did not take the recycle trade when I got above the level on the other side. And I was gone by the time they got down to 679.95. But I'm recording this until probably noon or so, I think is when I stopped it. So I'm just holding my cursor there just to see if they would make it. And they did, but I wasn't on board. So 12 o'clock, done for the day, done for the week. There's a quick look at the log. So by the numbers, how the week shaped up looks like this. Playing by the rules. You can read through the notes. Essentially up 4 points for the week because of the max loss limit hit on Thursday. And my trades, they varied because they're not always with the same number of contracts. And I ended in the hole. You can look at points, I guess. Negative 34 points, but it ended up being around $1,500 given back to the market for the week. So the contrast is kind of worth noting. The process, playing by the rules, that made money. My improvisation did not make money. So it's kind of a humbling but healthy reminder that playing by the rules works. I just need to get back on track. I seem to be slipping lately, but it's okay. I know what my long-term edge looks like. So where does that leave us heading into November? The market spent most of October, at least half of it or so, climbing out of this bearish consolidation. So they broke above 674. That was key. And they tested this trend line. They got to it, hit it, and so far they've pulled back. Still very bullish in the big picture. Right now, they're kind of in the middle of stuff. I did mention something about the weekly. Let's see, is this the weekly chart? In the game plan this morning, I mentioned it might be kind of interesting if the close of this week would be around 682.70. Well, that was the open of this week. And it's interesting that they came back down. Maybe we go back to the 1 minute chart here. 682.70 is up here somewhere. So this is the area that they got down to and slightly below right toward the close. And I find that kind of interesting because it kind of creates this, or it doesn't kind of, it does create a signal here. Timing might not be so much of a factor at this point because they just keep riding under these trend lines or this main trend line. But what they gave us was a tail candle or a doji candle, however you want to look at this. So some indecision in this general area. And it's the end of the week, end of the month. Monthly chart's pretty strong, no sense in looking at that. But I think that kind of might mean something. It seems as though there could be more pullback in the long term unless price gets above this trend line, the top one, and continues to climb out of it for another leg higher. Either way, we're at the intersection of timing and price once again, and the strategy doesn't really change. Identify levels each day that have a high probability of reactions, bull-bear battles. Just wait for the reactions, trade the process. And that's what keeps the odds in our favor. Don't really want to predict the future, just want to manage the present. So that wraps up the week ending October 31st, 2025. I will post Monday's levels and game plan before the bell per usual. Have a good weekend if you are watching this shortly after I post it, and I will talk to you again soon. Thanks for watching.